Are we finally crawling out of the hole created by this vicious bear market? Why does the stock market's performance almost completely depend upon the inflation bubble finally popping? Which stocks might make me the most money in this wild stock market, which is like walking into an oncoming tornado? Hang on. Hopefully, this will be a fun roller coaster ride. This is not financial nor professional advice. This video is for entertainment only. Hey everybody, I think we're in store for some good news on inflation, which may finally start to return this to a more normal stock market. Believe it or not, having interest rates around 4 or 5% and having a stock market that wants to run forward, if the Fed loosens up on the bridle a little bit, this horse wants to run, this economy wants to run. This is normal that you lower interest rates eventually and the stock market takes off like a rocket. It was a completely abnormal to have zero interest rates for so long. That was pathetic. We have an economy that can withstand the interest rate hikes. I've never seen a recession come where you didn't have massive unemployment and where the gross domestic product didn't go down significantly. The current unemployment rate is 3.7%, which is historically very low. The gross domestic product was positive for the third quarter, and the Federal Reserve is projecting that the gross domestic product will be positive for the fourth quarter. So the Fed is going to have to raise interest rates to cause a mild recession, but we're not close to that now. And for now, we have a little bit of running room. The Fed may eventually crash the market to an extent. I don't think it'll be a severe crash. I think it'll be slow and steady as it goes because they're going to probably decrease the rate at which they're raising the rates. So the next time they raise them is December 14th, and they'll probably raise it to a 0.5%, 0.5 of a percent, and there's like a 75 to 80% chance that they will do that. So that gets us to 4.5%, which is what we need. We need probably 5.5%, maybe 6% to get to where inflation is controlled. But I think they're going to add it more gradually after they hit 5%. Maybe the most surprising thing is that the price of oil has gone down fairly dramatically. It's now $77. There's rumors that the Saudis were going to increase production. Some of that has been denied. Some say that it's possible, but it's basically an unknown. It's an unknown rumor. Well, it's a known rumor, but it's an unknown fact at this point. And then there's the China lockdowns have increased recently. They started getting some COVID cases and some COVID deaths. And so they are worried about the health of their country. And so they're shutting down cities. They were taking more of a targeted approach, but it sounds like they have an increasing amount of targets. So their having lockdowns is probably going to decrease the demand for oil, which should keep the price of oil down. So we're getting some good news on inflation, and there's more good news to come. Some more good news as far as the Federal Reserve is concerned is when the unemployment numbers go up. And initial jobless claims were 240,000 when 225,000 were expected. So they want to bring unemployment down. No, they want to bring unemployment up. It's such a contradictory way of thinking. They want to bring unemployment up so that they reduce demand, which will make inflation go down. So they were happy to see uh, increased unemployment, the crazy times we live in. More good news was that the Michigan inflation expectations came down. It came in at 4.9% was expected for the next 5 years, when 5.1 was expected previous. It was expected that their expectations would be 5.1%, and their expectations come in at 4.9%, which is lower, which will make the Fed very happy, or somewhat happy. And then there was more good news from the manufacturing PMI, the Manufacturing Purchasing Managers Index, which indicates economic activity. If it's over 50, the economy's expanding. If it's below 50, the economy's contracting, and the Fed wants to see us contracting, okay? It was expected to come in at 50, dead neutral, okay? And it came in at 47.6% for November, which is a severe contraction in only 1 month. So the Fed may be inclined to ease up on interest rates somewhat sooner than we thought they would. And then on Wednesday, the Fed minutes came out, and it always puzzles me why this is a big deal. The Fed minutes, they've already told you what they're going to do, but I've noticed the Fed minutes, they invariably look for any sign of positivity, and then they go wild on that. And it's kind of an agreement among stock market traders that this is a big deal. So I guess it is a big deal because we've decided it's going to be a big deal. But there was some faint suggestion that they might take it easy on rates, or slow the pace at some point, which they'd been saying for a long time anyway. It was no real surprise. But the stock market saw something positive in that. So hey, let's go wild on it. And the stock market elevated, and the rockets fired, and we're going to the moon, baby. And I think the fact that Thanksgiving is the next day, I think we started to give thanks starting early. So you have all these factors leading to an explosive stock market. And then the VIX goes down to 20 point something. Okay. Below 20, that's when I'm in my mind, I'm thinking bull market. We're returning to a normal market, I think, folks. And I think the VIX going down, and then oil hanging around $77. This is major. This is major good news for the stock market. One sign that you may be in a bullish market is that you start to hear unfounded rumors of extremely bullish things happening. And one of those was that Disney wanted to be bought by Apple. Disney recently had a change of CEO back to Bob Iger, who was the previous CEO, and they brought him back because things weren't working out with Chapex. I think his name is Chapek, Chapex, something like that. And Iger, I guess they wanted had the Disney magic, and they thought he would bring it back. But the government would never allow Disney and Apple to combine, just because Apple is so huge, and you get too monopolistic if Apple latches on to a giant like Disney. Apple mostly buys smaller companies, and I think they do that partially so they don't run into trouble with the government saying they're becoming too monopolistic. So right now, I'm not thinking of shorting anything. A VIX near 20. To me, I only short, index funds when the VIX is greater than 25. I prefer 26 or 27. I do it when we're in a crash, essentially. Other than that, I want to be on the bullish side. And I'm so glad to be able to return to the bullish side. I've made a lot of money shorting by using inverse funds, but I'm ready to triple leverage more bullish funds. I'm being cautious at first, but I'm getting somewhat more adventuresome. My two defensive triple leverage bullish funds are CURE, CURE, and that's the healthcare sector that's triple leveraged, and it's done extremely well. Another triple leverage fund I'm doing is DFEN. Its symbol is DFEN. It's on the defense industry in the sense of making weapons of war. And we have an active war going on in Europe with Russia and Ukraine. And there's a need for countries to arm themselves and protect themselves. And notably, Taiwan might have to protect itself. So I'm very happy to help these countries maintain their democracies. And I think it's something we need to do. And so this has been a very good investment, as CURE has been as well. This chart shows the progress that CURE and DFEN have made in the last month. CURE is the triple leverage healthcare fund that's in green, and DFEN is the weapons and defense triple leverage fund, which is in blue. CURE has made about 23%, and DFEN has made about 26%. So these horses are running pretty well. I decided to add the triple leverage bullish fund on the financial services, and its symbol is FAS. And FAS has been doing pretty well, and I want to get in on it because we know that banks and financial services do better when interest rates are higher. And looking at the chart, you can see that it's had a rocky but upward movement in the last month. And I think it'll continue to go up as long as interest rates are rising. But at some point, I will get out of it probably, especially if a recession starts to hit hard. So I see this as a couple months of a swing trade, probably. So as the market decided to go on a bullish rampage, I decided to look into triple leveraging the indexes. And I settled on UDOW, which is a triple leverage on the Dow Jones Industrial Average, the SPXL, which is a triple leverage bullish fund on the S&P 500. And I usually triple leverage the NASDAQ by using the TQQQ, which triple leverages the triple Qs. You get too many triples in there. The QQQ is the 100 largest companies on the NASDAQ, and the TQQQ triple leverages whatever advance the QQQ makes by 3 times. So if the QQQ goes up $1, you make $3. And that's the case with all of these. And looking at the chart, you can see that the UDOW, that's UDOW, is in green, and that triple leverages the Dow Jones Industrial Averages, and that made about 30%. And the SPXL is in blue, and that was more moderate. It made about 5% in a month. Which is good, that's 60% in the course of the year if it continued doing that. But the triple Q, I started out in that, but I got out of it just because That's the 100 largest companies on the NASDAQ, which includes the FANGs, Facebook, Meta, Apple, Amazon, Netflix, Google, Alphabet, plus Microsoft, plus Tesla, plus Apple. I hope I said Apple. But these 100 largest companies, such as Tesla and Apple, they started to go up with the rally lately, but they have been struggling significantly. And they were sort of the last to go down. And so they might be the last to go up. So I think I'm going to wait a while before I do TQQQ. One of my favorite stocks is the symbol SMCI. Super microcomputer, and they make servers and all types of computer equipment. The statistics on this company is really outrageous. Their price to earnings is only 9.7, but their earnings growth rate is 41%. So it's a pretty outrageous company. And looking at the chart, you can see that SMCI, Super Microcomputer, has doubled year to date. Okay, wow. It's a volatile stock in many ways, but it's volatile on the way up. I don't mind volatility if it's generally going in an up direction, which this stock has been doing consistently for me. So I'm going to hang with it for a long time. Its price is only 91, and I say only because its value is around 105. And so even after doubling year to date, it's undervalued. Unbelievable. Another outrageous stock I own is Cross Country Health, whose symbol is CCRN, and they're a staffing company for medical facilities. They mostly staff doctors and nurses and other professional staff. But it's been I own the stock. It's been a winner. Its price is around 35. Its value is over 46. So its earnings growth rate is 42%, and its price to earnings is only about 11. So this is another winner in my book. And looking at the chart, you can see that it's gone from a low of about 21 to its present price, which is around 35. So it's made a nice gain year to date. And healthcare, I just like the field. I was part of healthcare before I retired. I previously was a private practice psychologist who had many contracts with different health organizations. So I tend to be biased towards entering into this field just because I do love the field, and I think we will always need health care, and it should withstand a recession fairly well. Next winning stock that I own is Steel Dynamics, and that's STLD, Steel Dynamics, and I like them a lot because they do a lot of recycled steel, which is aligns with my environmental concerns. But the metrics on it are just outstanding as well. I own Steel Dynamics, and you can see year to date, its low was around 50, and now its price is around 106. So there's been good growth with this company as far as the stock price goes. Its trailing price to earnings is around 4.6, and its earnings growth rate is around 23%. So it has a good growth rate, a good trailing price to earnings, and I think it's just a solid company. Industrials are tending to do better. In fact, the Dow tends to do better usually during recessions somewhat. So if we're worried about a coming recession, this company probably won't take it quite as hard as some other things you could buy. Please smash the like button if you would, as it really helps the channel out. So there you have it. You have 3 triple leverage bullish funds on different indexes. You got 3 triple leverage bullish funds on different sectors, and you got 3 bullish stocks. So I guess I'm into triples, and hopefully this tripling of a bullish run will triple my returns. And this is not financial advice, as I don't know your personal situation, and this is just what I'm doing. But it seems to be successful so far, and so I'm going to keep on doing it. That's the way I roll. Good luck to us all. I think good luck is coming our way. It looks like inflation is starting to go down. Thank you.